G'day, how are you? I just thought I'd jump on because I've got a lot of weird messages and emails from people with what's going on in financial markets at this time, and I just thought I'd have a chat. So, a couple of things we need to know. Yes, there have been mass market sell-offs or sell-offs in the market, and I woke up this morning, as we all did, to the US stock market, I think basically having its biggest fall ever in history. They halted trading twice because I think what happens is the way that the world works these days with computer algorithms, they I think if they don't stop the trading, the algorithms will just like keep selling down. So anyway, I'm not an economist or an investing professional or whatever. So all we know is there is a big mass sell-off. Have we seen the end of it? Probably not. Will it happen again? Probably. Has it happened in the past? Probably. So what's the problem? And the problem is over a snapshot of a 15 or 10-year period of our life with any event that's sensationalized and is real. I'm not saying it's not real. We live in the moment and we react to the moment. Now, people message me, oh, should I sell my super down to cash? No, don't do that. You will lose money. People said, oh, I'm going to sell now to cash, wait till it settles, and then go back in when it's, nah, you're going to miss the bloody rebound. And I was reading last night, and this is how fun my life is. I was up last night reading and a heap of articles on the internet from investors, like institutional investors, economists, and they're pretty much saying after a big event that's happening in world markets now, usually within the next, I think they said it was really late and tired, like it was like the market will rebound maybe 10 to 80% within the next 5 years. Okay. So what does that mean? Well, I got up Yahoo Finance this morning and I'll show you this. I'll do this. Here we go. I'll just hide that. So this is the All Ordinaries Australian Index. And I've put it in since the year 2000. And you can see what, like, investing in the stock market and your shares, your super is in the stock market, okay? The It's like walking a yo-yo up a hill, okay? So this is since 2000. Over the last 20 years, most of you listening and watching this, your super, you can't touch the bastard for 20 years. So why are you worrying about trying to get out here? It'd be like this little drop here. Oh, I'm going to get out here and then, yeah, I'll stay out, stay out. Oh, I'm worried, I'm worried. Oh, and I'll get back in here. It's too late. You've missed the upswing and it's probably cost you money. So all we know is long-term investments increase. This is the GFC. Will we see the same thing happening, what's happening now with this corona thing and the oil price war? Will we see a drop down to, I don't know, the same levels of 2008, 2011? I don't know. I don't care because I'm not selling my super. I'm not touching anything. I actually haven't even opened my super account in the last couple of weeks since this stuff started happening. And the thing you need to realize is your employer is putting money in your super every month, every quarter. And that's fine because over the year of the money going in, it might go in today, which is low, might go in at the start of the year, which is high. Over the year, you'll just get the average price of the market. So let's just chill out, not do anything sensational and go and sell our super down. And just a couple of things on that. I'm kind of happy to a point that I've got you guys to experience what's happening now in the markets and really pay attention to it because it's a good lesson in don't bloody invest until you got your consumer debt removed. So your credit cards, your personal loans, your afterpay, like clear all your consumer debt. Probably not worry too much about your HEX debt. Make sure your emergency fund is in place, and then set your financial goals. And that could be, I want to save up and start a business. Well, if that's your financial goal, you're not investing in the market. So because the reason why people lose money is they invest before they've got their foundations in place. And the foundations, your insurances, your consumer debt free, you've got a cash reserve, you've got solid foundations. Because then on top of those foundations are your goals. Then on top of those goals are your long-term investing. So there's no point investing up here if you haven't got the foundation sorted, because you'll freak out in these times and sell because you're losing money because your life isn't financially set up correctly. So I don't mind if you wait a couple of years before you start investing. Sure, have a roundup on your micro investing, knock yourself out. I'm talking about you consciously putting $100, $200 a month, whatever that is, extra into an investment account other than the rats and mice of your day to day. So for example, we'll go back here. Let's just go back and have a look. In 2016, you went, okay, I'm going to take 2016 and half of 2017. So that period, I can't even do it, that period there, to clean up my mess, get out of debt, get my emergency fund set up. If you took a year not to invest, just to sort your freaking life out, I don't think you're at a huge loss, because you've actually just guaranteed when you do start allocating money to investment markets, when this crap happens, you don't get freaked out here and sell all your money and sell out of all your shares and lose all your money. So be strong, turn off the TV, turn off your super accounts, just chill out. I actually have not read any professional economists or commentators talk about selling down at this time. And I haven't seen any commentary on people buying at this time either, because it's just way too choppy. Some people are saying, we like to see a good, week or so of positive returns, just so the market has kind of settled. But to be honest, we're in uncharted waters with this coronavirus business. So this could go on for a year. It could go on for 2 years. I don't know. But remember, strategy trumps anything. And your strategy should be investment market agnostic or blind. So as your strategy is, I just want to systematically invest $500 for the next 4 years. That's my strategy. I don't care if the market's doing this, because I actually don't need the money in my life. So I think it's a good lesson to learn now, before we start really throwing our money into markets. You've got to make sure your foundation's in place. You've got to make sure your goals are set. I'm not investing 10 grand tomorrow if you want to start a business next year and you have a tight couple of years starting your business or your side hustle, and then you need to sell the investments a year later. It's just not worth doing. And that's okay, because your investment in your business could be a very bloody good investment. Anyway, it's been great to have a bit of a chat. Let's just have one more look at this. See, look at that. Even if it falls, I've messed my axis up here. Cancel. Even if the market fell more there, it's still increasing over time. So if it falls down to 4,500 or 4,000 points, it's still, this is like, if you buy and hold shares, and particularly in an index or an index fund, you actually, like history tells me, call me crazy, that over the last 20 years, if the all odds fell, you actually didn't lose any money. People do their ass because they invest here without a strategy, and sell here when they're freaked out. That's all that happens. So it's been real. I'm not in New York, by the way. Well, I might be. You'll never know, will you? It's either a fake background or I'm really in New York. Hey guys, thanks for listening, and I hope to continue this discussion with you soon. See ya.